Good day, ladies and gentlemen. Welcome to today's discussion, Purpose of the Firm and Organizational Structure. Previously, what we did is we understood what managerial accounting is and that it provides information to management. So let's take some time and say, what is the purpose of the firm and what are organizational structures? The purpose of the firm, if we look historically, goes back to an economist named Adam Smith. And human beings are all self-interested. They will always maximize their own happiness and profit. So it's in saying that it would be the purpose of the firm to make as much money as possible. And his premise was this invisible hand would guide and provide correction to these things. So there's this self-interest versus maximizing your own interests. So when we look at the purpose of the firm from a historical perspective, it would be to make as much money as possible for the shareholders. And what he said is this invisible hand would come in, and that profit-seeking producers are going to make more money, needs of society are met automatically, government doesn't get involved, competition keeps quality high, competition keeps price low. It's an invisible hand that regulates the free market. So that was how Adam Smith, a couple hundred years ago, perceived the purpose of the firm. I would suggest to you that has really changed, and I would say let's look at it now from a little different perspective. Is that there's many people who are involved in a firm, whether they be owners, whether they be customers, whether they be managers, whether they be workers, whether they be suppliers, etc. So let's start with the shareholder. Shareholder is the person who owns the company. What are they looking for? Well, growth in their investment, a return on their investment. They're putting capital in and expect a return. Second, customers. What do they want? Quality product at a fair price. Quality is sort of an elusive term, but what does quality mean? There's not always associated with higher price equals better quality. We have different expectations around what our products and services are supposed to do. But we're looking for a quality product at a fair price. Suppliers, they're looking at you as a source of doing business. They need to get paid. So if I'm producing for you, I want that business to continue for my own business to be successful. Employees, I think we have management and we have workers. But in both cases, I think people want more income. We all want more income. And to some degree, we really want job stability. And I think in this pandemic that we're going through, this becomes very valuable. Debt holders, people who've lent the company money, they want to be repaid. Government, source of taxes. The public, well, safety. So if we look at these different interests, there are ways that we can, let's take each one of them and say, well, as a shareholder, we could do certain things, the management could do different things to grow the shareholder, create value for the shareholder. We got to look at time horizon, short term and long term. What I'm going to do in the next couple slides is look at things from the perspective of a restaurant. A restaurant, I think, is a common thing that either many of us have worked in restaurants or food service, and we've all been in them, so we might have some sense. Now, if it's about all making money, let me give you an example from a restaurant perspective, is that I use tomatoes that are a few days old. Maybe they're getting a little soft and maybe a little rot here and there. Now, I can get a better price. So if I get a better price, then I can increase my return to the shareholder. But now look at this from a customer perspective. So if I'm coming into the restaurant and you're giving me old tomatoes that don't have any taste and are soft and mushy, I'm not going to be happy because I expect that. Now, let's just look at the employee perspective. How would the worker be impacted? The server. How would a server be impacted? Gratuity, tips. So if I'm a customer and I'm not really happy, that's going to impact the workers. Now, if I'm not happy, am I going to come back? No. If I don't come back, that means you've lost a customer. So we have to, when you're going through each one of these, there's different interests and different goals, but they're interrelated. And I don't think you can look at just one, as Adam Smith had suggested, and say it's just about the shareholder. Grow your investment, everything else will take care of itself. Well, I don't know that that's a real way of managing a company. In the past few years, what's happened is that we're introducing this concept of a stakeholder view of the firm. Is that you have people who are directly involved by the activities of the business, and then you have those that are impacted by how by the actions of the firm. And I think many companies are now taking this view in saying, if we're going to be really successful, how do we deal with each of these areas, these different stakeholders? Each stakeholder has a specific need, but yet they all tied together for success of the firm. We start those that are, we have the business, and we go off to employees. Employees being a key part of the business because that's what's needed to deliver the product and service to the customer. Now, but people are also one of the most costliest part of the business. But there's so many regulations that go around that, so many different things. So we're dealing with underrepresented groups, we're dealing with older employees, we're dealing with unions, activists. So we got this social environment around the employees. And that this all comes into play in a company. You can't ignore these. How do you balance those needs with the other needs? We look at the owners, and there's different types of owners. Private citizens, you and I, institutional groups, board members, all have a slightly different interest in this. We look at consumers, and when we look at the consumers, you have the average consumer, but then you have social activists who go in, your product is not safe, and then there's product liabilities. Okay, a liability for a product that you may have made unsafe, whether that be Roundup, whether that be cigarettes, whether on your McDonald's cup this product may be hot. Well, these are product liabilities. So all of these are around the consumer, the community, where you do business. Okay, the civic groups. Do you have a civic responsibility as a citizen? Environmental groups. If your firm is producing toxins, is that good for the community, the general public? We then have the government, federal, local, and state, depending on revenue, but also from a regulatory perspective. So when we look at the stakeholders, they operate within 4 areas: the social environment, a technological environment, an economic environment, and a political environment. So these are some of the pressures that are on a firm. So a firm, if you're looking at it, needs to adopt this stakeholder view to take these into account. You can't ignore them. Okay? You have to look at what the needs are and then be able to balance the delivery of all of them. Can't ignore them, but you don't have to give them everything. This is about maintaining a balance, because in my opinion, the purpose of a firm is financial sustainability, that it continue to operate over a period of time. And that only happens when you have an alignment of interests. So I think when we're starting to see you're going to be providing in management accounting a useful information, not just accounting information, but we take into account in managerial accounting a lot of other pieces of information, whether that be people, whether that be process, whether that be volumes. It's all tied together. And managerial accountants are the ones that sort of prepare all the information so that management can run this. So if you're providing information to management to be able to effectively make decisions and understand what's going on here in the different environments. So it will be more than just finance, numbers, but it's alignment of interest, financial sustainability. Managerial accounting takes into account other things other than numbers. Well, let's take a look at how organizations are structured. In most companies, there are assigned responsibilities for specific functions or activities. Now, at a very high level, a simple corporate structure is at the top, you have a leader, the president and chief executive officer. Some companies break them down, but this is a very simple structure. Every company has this. President and chief executive officer, the boss, runs everything. But there's 4 primary areas that are under him. The first one is sales and customer care. Who interacts with the customer? Then we have operations manufacturing, those that produce what goes to the customer. The chief financial officer has become the number 2 person in most corporations today because finance is so important. With the onset of COVID-19, finance is even more important. And managerial accounting is even more important because now need to make decisions, make them quickly based on facts. Okay. Then there's administrative support. And if you think about that can be your human resources. This can be your cleaning department, technology department, transportation. And this is a simple corporate structure that everybody has. Why are we doing this? Why am I going through this? So that you can see that we're providing information to these different areas based on their specific needs. And their needs are different based on what they do. This information you provide to operations manufacturing, it probably has limited meaning and use to sales and customer care. So you have different levels of different types of information, but the information has to be usable by that area. A lot of times people look at things as line responsibilities, a line department, which is directly involved in providing things to the customer. And if you're in a restaurant, it's the front of the house. Okay, that's the hostess, that's the front end manager, that's the servers, that's the busboys. So that's front of house. So if you think of it that way, direct interaction with customer. The second is staff responsibilities, back of house. Okay, a staff department provides the services and things to the line, but they also make stuff, so they're integrated. When we look at how companies are structured and a little different, we really are looking at, let's just say, 4 different organizational types. When you break a company down, it can be divisional, based on the product. So in this example, this is the electronics division, home goods, yummy snacks. So it's organized based on product line. And there's a marketing, a sales, and a service function in each area. Okay, so this is a product-based. Here's an example of a geographical structure. North America, Europe, Middle East, and Africa, Asia. So they're organizing based on geography. Here, it's a functional organization chart, okay, where you have the functions aligned, and then we have the matrix organization, where we have the different disciplines, and these disciplines functions face off against projects, but they can also face off against geographic structure. We could put North America here, EMA here, Asia here. We could put electronics division here, home goods here, or yummy snack here. So these are different ways of running a company. Again, why are we looking at this? We're looking at this because we need to provide reports, management accounting reports, to these different disciplines, okay, and functions, so they have useful information. Let's take a look now at the role of financial management. The role has evolved in companies exponentially over the past 20 years, from simple bookkeeping and historical reporting to leadership and full integration to the management process of the firm. Broad integrated role to contribute to financial sustainability, providing, in many cases, independent views, unbiased views. The process of finance, and I use finance in the broad sense because finance includes accounting, is to create a framework for decision making and provide information for decision making. That's what management accounting does. How all the pieces work becomes important, ensuring compliance with rules and regulations. Let's take a look at how a chief financial officer is organized. Oftentimes, there's 4 basic areas, as you can see from here: the controller, the treasurer, compliance, governmental compliance, risk management. Now, in this time of COVID-19, this becomes a very important role in a company. Compliance, we have to comply with all these new rules and regulations. Now let's look at the controller, which is oftentimes the largest in terms of people in a finance organization. These are general accountants, reporting, tax, management accounting. So these are the 4 functions: general accounting, that's the reconciliation, the running the subsystems; reporting, that's the preparing external financial reporting; tax preparation; and then management accounting, which we're looking at now. As we look at another important person to look at here is the treasurer, who has cash management, financing, investor relations. We look at the controller, and it's broken down. Here's our general accounting, general ledger, reconciliation, subsystems that keep the data. Reporting, 10K, internal reports, tax, compliance and planning, and in our field of management accounting, cost accounting. How do we allocate costs throughout the organization? Analysis, what is this information telling us? Involved in the planning process, budgeting. So this is the controller, and we see management accounting being underneath that. The next function that I did want to take a minute on is the treasurer. Cash management manages the day-to-day cash flow of the company, manages the banking relations, cash flow planning. Again, management accounting is involved in all of this stuff. So there's a lot of different roles that in the finance area that work on taking information, historical financial accounting information, product information, market information, putting it together to help management make decisions. So what's next? Well, this is the first part. What we're going to take in another role is another few minutes and talk about what's the role of management. What does management do? So if we can better understand that, we'll be able to better understand what management accounting is and be successful at it.